headline comes to us from Bloomberg News. 5 trillion, quote, wealth shock is cracking Americans' nest egg. Do you know that collectively, OG, people have lost more than $5 trillion. Did I say million?
I'll take hyperbole for 300. Alex, please.
The world's richest nation, Bloomberg writes, is waking up to an unpleasant and unfamiliar sensation. It's getting poorer. Americans' collective net worth has been climbing at a dizzying rate for the past 2 years. Even as families and businesses contended with the ravages of COVID-19, households piled up. Listen to this.
That's why they got extra money, because of all the stimulus money.
An extra $38.5 trillion from early 2020 to the end of last year, bringing their collective net worth to a record $142 trillion, the Federal Reserve estimates. Just as the U.S. is learning to live with the virus, shifts back toward pre-pandemic normal, faces a new scary threat, a plunge in wealth. Since the start of 2022, that J.P. Morgan and Chase estimates total at least $5 trillion and could reach $9 trillion by year end. So let me get this straight. And this is why I wanted to highlight this. You talked about hyperbole, OG. The headline sounds awful. I dig in and they go, hey, we made $38 trillion in the past 2 years. It's way more than years before. We've just been raking in the cash, and everybody's feeling really bad because we've given back 5.
Yeah.
Right.
Yeah.
I like what you just said a second ago, OG, which is hyperbole for the win. Or, I mean, it does. It just seems like, we got to fill the word count. We've got some column inches we got to fill. What can we write to maybe make somebody's eyebrow raise and click on our article?
Well, it worked for us, apparently. We clicked on it.
Yeah.
Yeah, this sort of stuff is so frustrating because, we talk about the need for financial education. We talk about the need for making sure that people do the right thing with money. We talk about how you're not taught financial education in school, and everybody is like, oh yeah, we need more financial literacy, da 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 da. And then a media outlet that is, consumer facing, that is, ostensibly designed to like help the people with money, runs stupid crap like this, and it just riles people up for no flipping reason, instead of saying what should be said, which is the words that they said they can say. They just have to say it differently. Hey, in the last 2 years, we've had $38 trillion of growth. Now you're giving back 5. You shouldn't be worried about that. This is kind of normal. The market goes down 14% every year on average. So now we're down 18, which is kind of sort of, maybe a little below average, but still kind of within average. Hey, it's been up 20 some odd percent the last 2 years. If you go back 5 years, the market's still up 70%. Like, all of that stuff is the stuff that Bloomberg should be flipping saying, and not this nonsense about like, oh my God, you're about to be broke. And it's so freaking infuriating when companies will, or, places will, spew this nonsense, when our job as, in the media, our job that we try to do, and what they should be 1,000 times better at than us, because, they have a whole freaking team of people to do, is to help people do the right thing. And that's not what's happening here.
So how could they have changed that headline so that it still said, in the last 3 years, we've gained 33 trillion.
How about, have you checked your 401k balance? You're up 33 trillion.
That doesn't get me to click on that article.
Your 401k balance is up 33 trillion. I'm not a marketing guy, but this is this is Joe's trying to get a word in. It's just sorry, dude. You
I've got the headline. It's halfway through
kick
the piece.
The hornet's nest.
I'm just trying to tell you what the real headline is, because it's here and it's buried.
You kicked it, and then Doug kicked it again.
I'll be the judge of whether or not it would get me to click on it. Go ahead, you try.
No, I want to hear Joe's.
OG's on a rant. Go ahead. After you. No, really, after
Age
you.
before beauty.
I'm just going to sit here and wait.
I'm done.
Drink your cranberry juice cocktail and wait for us to finish.
John Norris, chief economist at Oakworth Capital Bank, said it's painful to get back to normal after really being in a fantasy world last year. And here's the headline, the second half of his quote. It's going to feel a lot worse than it actually is. I would click on a piece that said it's going to feel a lot worse than it actually is. But that's clickbaity. It's fun. You click that and you go,
that sounds like a headline from Cosmo, not from Bloomberg.
Exactly. All of these sound like that.
A lot worse.
They have the same writers.
Eight ways to please your woman, and then it's going to feel worse than it actually is. I didn't even want to know what that article's talking about.
It's just so annoying that, that we can't rely on the people who are supposed to be in the know, right? Bloomberg or the news, or you know what I mean? Like, it all has to be, to your point, Doug, and maybe this is where you're getting to, it all has to be around how many clicks can I get? How much marketing money can I get? How much ad space can I sell, on this, in this newscast or whatever. And, instead of having the actual helpful thing, I don't know. It's mind-boggling.
If you feel like you've lost a lot of money, how about this? Elon Musk has, as of the time that this was written, has lost $139.1 billion. Imagine him looking at his 401k statement.
Isn't that like us losing about $400?
It's time to rebalance. Actually, they say here it's 41% of his net worth. Maybe that's what happens when you go after Twitter. I don't know.
That's when you own. That's what happens when you own single stock exposure, and your wealth rises and falls based on the outcome of one specific company.
Yeah.
Mr. Bezos, second richest person, lost $82.7 billion, 39% of his peak wealth.
Yeah. So it's, and I have issues with that information too. Like, what do we do with this? Like, so what? I don't care. What does it matter to me? Is it misery loves company? Am I supposed to be like, well, my 401k is only down 18%, so I guess I'm doing it.
Maybe I'm zooming out too much, but for them, it's like I was going to say a Pyrrhic loss. It's paper loss. That wasn't real wealth for them, right? I mean, because they weren't going to cash out 2 months ago of everything, and neither are we. If our 401ks go down whatever percent, we weren't going to cash out. We got to let it ride, just like they're going to let it ride. So isn't all of that talk about how much you're losing just irrelevant? Unless you were cashing out that day, it was your retirement day, and that was your day to cash out, which you're still not going to do. It's a stupid analogy, but aren't those losses?
I think it's relevant if you need the money. If you need the money right now, it's definitely relevant. If you don't need the money, then it's not relevant. But if you need the money later,
but nobody is cashing out of their investment pool. Almost nobody, except in the most extreme, unusual circumstances. Almost nobody is selling everything that day or that month.
No, but still, if you're selling like Linda on Monday, remember Linda talking about cashing out the 529 plan, where she's got too much money in a spot that's lost money. She's in the age-based, and it still lost a bunch of money. So she thinks she did the right thing, still lost some money. It's difficult to see those situations. Those are
but that wasn't 40%. Right. I mean, I get it.
No, and on paper, the loss looks a lot worse than it was, because she's only taking a portion and cashing that out, but it still ends up being a real loss. I think this is a good reminder of people to go back and listen to last week. OG and I did a top 5 where we talked about the top 5 things to do in the market downturn. We'll have a link in the show notes to that. That should be your next listen if you're worried about the fact that we have doom and gloom now, according to Bloomberg. It's all over, OG. Just pack your bag, move to a cave, and I think we're about done. So on that happy note,
move to a cave or a basement.
Happy ending note. Yes.